Good morning, good afternoon, good night. Whenever you're watching this video on this beautiful planet, I appreciate the support, really do. My name is Joe Josh. I go by iChart Daily. Today's December 26th. Merry Christmas, Happy Holidays, and we're back. Thank you for everyone that has shown support, reaching out, messages, emails. I'm not going anywhere. I've been doing technical analysis for literally 16 years. I took a break because my last channel is gone. I still don't know why. I don't know if I was hacked or if I did something wrong, but it was definitely a hard pill to swallow, and I just needed a break. I really did. But because of all the messages, it made me realize why I'm doing this, and it's because of you guys. I really appreciate the support. I appreciate the community we're building and the relationships as well. So here we go. Since it's been almost 3 weeks since my last video, I'm going to give you a full technical analysis breakdown on Bitcoin and XRP. And before I do, this is not financial advice. This is for educational purposes only. This is a window to my thought process and just a bunch of hypotheticals, cuzzy. So, first thing you need to understand about Bitcoin and its cycle that is happening is since 2012, these halvings have had a major impact. Those are the blue lines. Do your research if you don't know what the Bitcoin halving is. We are approaching it very shortly. We have about 3 months, 2.5 months, depending on how many blocks I have gone through the system. And with that being said, we zoom into a weekly. Here we are. We are at major resistance, cuzzy. We're at that greed level of 45 to technically 48,000. The reason why I say that is when you use a VPVR in this range, you can see that your next major level is here around that 47, 48,000, where you potentially could see some major selling pressure from the big dogs. Next thing that I am looking at is the MACD, which is a trend indicator, and the RSI, which helps me understand if we're going to have continuations to the upside, if we're overbought, oversold. So, first thing that I am noticing is at resistance, we're forming this symmetrical triangle, or potentially a bull flag, or even an ascending triangle. There are a couple things that are happening right now, right? So we did have this double bottom, we did come back up. The first thing that we need to see is, are we getting any divergences on the indicators that'll help us understand what's happening with this part of the chart. What I mean by that is what is happening with the RSI and the MACD. On the weekly, we are still pointed up, but volume is coming down. So that's kind of strike one on the somewhat bearish side. Number two, most important thing is, are we in section A or even A plus, which is above the 70? And we are above. When we have support on the RSI up around this 50 line, you can see here this was a fake out. It shows that you can have continuations to the upside, right? We came down, we made a higher low. We came down, we made a higher low, came down, we made a little bit of the same low, still higher because this one was 24.7, this one was 25.4, went up to the 70, used the 70 as support. That's even more bullish. But now, this is the first time that we are making a lower high, right? We went from here to here, here to here, here to here, right? Eventually, we don't chase green candles, especially on a weekly. Now we want to see we made our first lower high. The line in the sand is the 70 line, okay? And also this moving average. We need to see if we come back down, form a lower low to the 70 to 90, and stop at the 70. If we stop at the 70, we do not break this beautiful orange support line, and we do not break the 41,127. So once you identify the chart, the trend, and what needs to play out in order for this to go bearish, you could start setting some alerts. What do I mean by that? Well, I just told you the 70 line was the line in the sand, so I want to see if it breaks this low here of the 73.28. I'm going to put an alert right below it, right here around like the 72.05, in between here and the 70 line. Once that goes off, then I'll look at the chart and see if it's showing any bullish pressure, if we're seeing buys and we're going to have a bounce, right? Or do I need to set another alert down here notifying us that we could potentially come all the way back down to the 50, and where does that take us, right? So once again, I don't know exactly what's going to happen, but I know how to prepare for what could happen, right? If anyone's ever done boxing lessons or Muay Thai or anything like that, you're preparing for battle. But when you go to battle, you don't know what your opponent's going to do, but you know if you get a hook or a jab, how to react to it. So what that means for this is if this breaks down, where is it going to take us to? Are we going to have a play on the table? Where should support be? On the weekly, when we come back down to that 50, we usually break to the 11 and 21-day moving average. How do I find these things out? I back test. I see where it has gone in the past when it's come back down to the 50, right? During a continuation, when we came back to the 50, back to the 50, back to the 50, we came back to these beautiful yellow and purple lines. So we here, if the bearish divergence does play out, you're looking at support here first at 38.7, then back here at 35.3, right? Now another line that we're looking at is this orange line. We have technically made two nice big bounces, right? This is what I see. This is one bounce, excuse me, and technically this could be another bounce, right? Do we come down and do something like this and double bottom, where we come down and do like a double bottom, meeting back here at the 42.5 to potentially 36? I could see that happening again. Why do I say that? Because the long-term trend is going to predict your short-term outcome. And as long as the monthly looks good, you should have some green candles on the weekly, right? If your monthly is green, that means you need to have 3 green candles on the weekly. If the weekly is green, that means you need to have 3, 4, 5 green candles on the daily, right? You're betting with the trend. The trend long term is bullish, so we're expecting another higher low to these right here, right? If anyone remembers 17.5, 15.5, 13.5, me calling that bottom, do me a favor, leave it in the comment section. Appreciate it. But yeah, these people here were buying around 15.5, right? We went up, we came down. These people here were buying at 25.5. If we now go up and come down, these people here are buying at 34 to 32,000, somewhere over here, and that's another higher low, which shows us this high here, this high here, this high here could be broken once again. And guess what? That lines up exactly with the halving around March, April, May. So now we zoom in. What does that mean? I want to see if we're getting more bearish or hidden bearish divergence on the 5, 4, 3, 2, 1. Let's zoom in, cuzzy. So 5-day. What am I seeing? I want to see, are we going to get a death cross? Did we break the 70? Did we break the moving average? 4-day. Okay. Looks a little bit more bearish. We officially broke the moving average. I want to see if we break the 70 line. 70 line is going to be your most recent support here of 40,000, let's just say 41,000 to 40,005. So now that you identify that this is the next line in the sand, once again, set an alert. Set an alert to 68.82. I want to see if it bounces and we stay above and we have a continuation to the upside, or if it breaks below. 3-day. 3-day broke below, and it looks like we're about to death cross. Now, because this is death crossing above the 0 line, it shows that we could go flat. 2-day, 1-day. Here's the most important one right now. We want to see if the 1-day breaks the 50 line. If it breaks the 50 line, we're breaking the support of the 41.3 to the 40,006. You see these wicks here? Why do I say that? Because the price action is going somewhat sideways, right? This looks like a potential double top with also a double bottom, but you want to see which way the waves are going. If the waves are going up, then it's bullish and you're making higher highs. Okay? If your price action is going sideways, but now we start seeing lower highs on the MACD, lower highs on the RSI, right? We came down, this one's lower, right? So we went from here to here, same low. Now we came down, came back up, got rejected by the moving average, and we're heading back to the 50. We want to see, are we going to stay above the 50, or are we going to break below and go into section B? Because we understand the importance of this right here, I'm going to set an alert. And because now you have an alert on the 3-day, the 5-day, the weekly, it's now a chain reaction. If the daily goes off, you now understand to check the 3 and the 4-day if that one's going to break down. If the 4-day breaks down, then you understand that you have a higher probability of the weekly now breaking down. And if 1, 2, 3 break down, well then remember, you have the cheat code. Where potentially could we break down to? So now you understand fully how to set alerts, look at the chart, and understand what's going on. The reason why I say the importance of staying above the 50, just look left. Just look left at the last time we stayed above the 50, and then what happened when we broke down, right? Stayed above the 50, stayed above the 50, stayed above the 50, broke down a little bit, we broke this support, and saw blood. Once we started using the 50 as resistance, we made lower highs and we made lower lows, right? Same thing here. We were above this support line, okay, making higher high, higher high, higher high, hidden bearish divergence, making lower lows, lower highs, and because we broke the 50 right here, we broke the support line and went down. So we're here. The support line is the orange. If we break down, we have potential to break the support and head back down to here. I could see the first move possibly taking us here if the bearish plays out. And because we break support and we come down here, we would be looking for another lower high, but technically now using the orange as resistance, showing us that we're breaking down. How does this neglect? If we stay above the 50 on the daily. If we stay above the 50 on the daily, we could come back up and potentially do something like this. But once again, us seeing the lower high, lower high, lower high kind of shows me like this one could come here. We could do this. We could stay above the 50, come back up, then get rejected by the 70. If that plays out, we're still going higher. We could potentially break out of this. This symmetrical, maybe bull flag, something like this. This goes from here, and then we have one last hoorah up to the 48,000. But as long as you continue seeing the bearish divergence, you have the upper hand saying, well, you better take your profit and play this correctly because the chart is telling you one thing while the price is doing another. And that would be a measured move, right? This is your resistance. This is your support. Here is your flag. You would take the flag, bring you right here to the 48.3. Now, you can also set an alert here at the, let's just say right here, the 41.8. I want to know if it breaks this low here and goes back down to the 41.1. Now, depending on what Bitcoin does, will help you understand what's happening with XRP. XRP potentially could break up to the 72 cents or back down to the 53 cents. And what do I mean by that? Well, the long-term trend still potentially looks good. We are still pointing up and we are still above the moving average. And we have a little bit of room to go back to the 54.97 and even make another higher high, potentially I would say here, the 55.63 or the 56.07. The reason why I say that is that is the top of this candle and the low of this candle, which would technically be the next resistance level. So because we're still pointing up, I'm expecting this. As you can see, we did make a lower high, but we're still above the moving average, showing us that we still somewhat remain bullish. Unfortunately, because of Bitcoin's dominance, that chart and what happens here will predict what happens here. Bitcoin has right now 51.75% of the market cap just in itself. And because it has such a high dominance level, it messes with the alts. So one thing I do want to say is if Bitcoin does have that pump and goes to 48,000, this does look like a nice play that could take you from, let's just say, the 60 cents back up to this resistance level of the 83 cents. Right here. Right here, I see major resistance, and right here I see major resistance. Now, another thing that's helping me understand that we potentially can have that one last hoorah before we eventually break down is when I was looking at XRP versus Bitcoin, we're extremely oversold at support. Right, so you can see here when we come down to this blue line, we pop up. Come back down to this blue line, we pop up. We're at the blue line, where it looks like we're pointing up, and it looks like now, we're still early. Check the 5, but that I was looking at this. Like we are extremely oversold, and we want to see eventually come back up. When it does come back up, right here, we had a pump, and I'll show you. Right here, we had a pump, and I'll show you. This was March 23. This was July 23. Let's go to XRP versus the dollar. This was March 23. This was July 23. And look how it played out where we had the bull flag and the break up to the upside. Right? You could take this measured move here. And now we have this one potentially about to break to the upside as well. Back to here. This is, like I said, 83 to potentially 90 cents. So now you need to play this right, because if Bitcoin breaks down, then technically this is a descending triangle, and this is also a measured move back down to 53 cents. Not something to be worried about, because technically you are still making higher lows every single time, but now you understand what could happen. What has a higher probability of happening? Probably the break to the upside. So I'd say it's like an 80-20, 70-30 that it breaks up more than down, but you just still got to play it safe. As long as you see wicks on the bottom of the candles showing you buying pressure, and the reason why I'm saying this is I'm going to post this today. This could still play out for another couple of days, Friday, Saturday, Sunday, and then it could play out. So I'm preparing you for both, right? It's not confirmed yet. The confirmation is the break and the confirm, or the break and the confirm. You understand? Nothing's happened yet. We're still in this trend coming to an apex moment. So if we break to the upside, XRP is breaking to, like I said, 83 something cents. If we break to the downside, then XRP is coming back down to the 54 cents. But with us being oversold on Bitcoin, it helps me lean more towards the break to the upside, right? So that's all I'm saying. Love you guys. Appreciate the support. Hope that you learned something from these videos. What I would do is set 2 alerts on XRP. One here at the 59.6, notifying you that you are potentially breaking support. And I would also set another one here at the 65 cents, showing you that you are breaking this most recent resistance level here. That's it, folks. Love you. Appreciate the support. Once again, the breakdown would be this: retest down, retest up. You'd want to see it do this, stop here at the 67, retest, form higher low, and then you'd break to the upside. That's it. Love you guys. Appreciate the support. If you know someone that could benefit from these videos, please share it. Like, subscribe, turn on notifications, the whole nine. Enjoy the day.